a quick conversation with C. Vijayakumar on what is to be anticipated in the year to come, more importantly in Q4 as well, which is going to be very, very important. Hear him out.
Q3 went largely in line with our expectations. The services business actually did a little better than our expectations. We grew 2.2% sequentially. The software business, obviously, this is a seasonally strong quarter. It grew very strongly, but on a year-on-year basis, there is a slight decline. That was a little below our expectations. Overall, top line, more or less in line with what we expected. In terms of margins, our performance has been good. We had launched Project Ascend, which is to bring a lot of efficiencies across multiple aspects of our overall operations. That is also showing good results. So we delivered a very good margin performance as well. And our TCV booking was, while the overall number is somewhat in the same range, but I think the little nuance there is the ACV growth is year on year 23%. That is, again, a very positive sign that smaller deals are getting converted and smaller tenure deals are increasing in the overall booking.
Is that going to be supportive of near-term growth? Almost everybody believes that will be the case. So therefore,
that's right.
You would second that as well. And is that the way to think of business right now as well, CVK? Because it might be difficult to really forecast 12, 18, 24 months out.
Yeah, I think, obviously, you need to make some assumptions and create a plan. But I think the confidence on what would happen in the near term, 2 quarters, is a much better estimate than a full year estimate, I would think.
Got it. You alluded to the software business YOY growth, which was a bit lower than you expected. Some people are talking about this due to a delay in signing certain large deals and renewals. So is this a case of justice delayed and not justice denied, in that maybe post this quarter things will improve?
Yeah, definitely. You have to see how those deals really, they're delayed. Now, will they positively convert or not is something which is still not certain. So we are still working on them.
Okay. A more macro question, CVK, and that's something that when we talk to analysts as well or market experts, they are also trying to understand that usually clients' budgets, if they would have been getting firmed up in the month of January, especially in the US geography, or maybe others too, is this time slightly different because the Trump swearing in is yet to happen, some of the policy clarity is yet to happen?
Yeah, I'm only kind of making a judgment based on what we saw in end of September versus end of December. We saw an improvement in the demand environment. Now, obviously, in the next few days, there can be significant changes in the overall business landscape. And the impact of that, I think it's very difficult to really factor in at this point because there are too many unknowns. So once we have clarity, that will probably be end of this quarter, we can provide you a good commentary on that.
Okay, so which is what I was trying to understand. So you do believe that there is an improvement and there could be even further improvement and further clarity that could come in at the end of this quarter around. Okay.
That's right. But of course, you have to keep in mind about the larger political and business landscape changes that could come in the next few weeks. And how does that change clients' priorities, their spending patterns? All of that is something we don't know. At this point, we are just extrapolating what we saw in September and December and numbers.
Got it. And CVK, I would presume that it will be hazardous to make a guess or a hypothesis for a person in your position right now as Q3, right? You don't want to make that guess right now as to what it could look like.
Yeah.
Okay, fair call. On the margins as well, it's largely in line. Will it follow the same pattern? Q3 is a good uptake, Q4 seasonality, wage hike, something in a bit of a modest drop. Would that be the pattern, you reckon?
Yes. I think our margin pattern across quarters are very, very consistent. We start with a slightly lower number in AMJ. It improves in the September quarter. It further peaks in December and then moderates in March.
Got it. And that same pattern would continue. Okay. CVK, The big question is that will the nature of the deal wins? I mean, at least in the run up to the results and post the TCS results, in the commentary that we had with, or rather the conversation that we have with people, most people are trying to understand, will the nature of the deal wins over the course of the next few quarters, if it's possible to hypothesize, be different than the traditional long tenor deals that IT service companies were used to winning as well. And there have been patches, right? Patches of very long tenor deals, then a bit of short burst of short tenor deals. How do you, is it possible to guess about what 2025 could throw up in terms of the nature of deal wins?
I think given all the changes in technology, generative AI and other aspects coming into play, I think the propensity for smaller size deals and shorter tenure deals are going to increase. That is what I'm seeing. So large deals could be broken up into smaller deals. Even a generative AI large modernization program could be done in different phases, and phase-wise we might be signing statement of works and things like that.
Okay. Last question or two, CVK. The big question mark overhang is ER&D, and just trying to think about how you think about it, because you have a significant presence. One of the ER&D players' numbers haven't been the greatest. Auto isn't necessarily the strongest sector right now. How do you foresee spends by auto majors and thereby revenues for companies which are pure play ER&D, or like yours, which have got this large presence?
Yeah, I think our ER&D business is probably the largest in the global system integrator space. It's close to $2.5 billion.
Right.
We've seen a good momentum in ER&D in the last quarter. It continued in the September, both in September quarter and December quarter, we saw a good uptick. Of course, auto segment continues to be a matter of concern. There are definitely significant ramp downs. The sector itself is under a lot of stress due to various things. So barring auto segment, I think it looks pretty good. And we are a well diversified engineering services provider. We have good presence in telecom, tech, manufacturing, and then auto, life sciences, healthcare. So I think given a diversified portfolio, we think the slowdown in auto can get offset significantly by some good momentum that we are seeing in other areas.
Interesting. Okay. So a good momentum, deal wins, improvement in discretionary spending, green shoots in BFSI, retail, all of these that the street has absorbed is now known. I have one final question, which is a bit of a technicality. A lot of people are now talking about, I mean, not now really, but through the years, the high payouts, the dividend yields remains amongst the best in the industry. You plan for that to continue, right? It's a laid out plan that you've given out maybe a few quarters ago that continues unabated.
Yes, our payout policy is we at least pay out 75% of our net income over the 5-year period, which started, I think, in 2021. So I think it's been a fairly stable, and our payout in the last 12 months is more than 90% of the net income.